It's still in the conversation because of the liquid restaking narrative, the non-custodial design, the real TVL and restaking activity, the expansion into everyday spend products, and the simple fact that any protocol tied to Ethereum staking and eigenlayer continues to draw attention. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on ETHFI. I actually read them. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to outright negative for an extended period. You'll see a mix of hold and sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets have flipped around, but the short term outlook from pure chart based sources remains defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is more coverage for ether.fi than for lower ranked names because of its ranking and restaking role, but the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. On the technical side, the bigger picture remains a clear long-term downtrend from the much higher levels reached during previous restaking and DeFi runs. Price has spent extended periods making lower highs and lower lows, with recent action testing support near multi-month levels. Short-term bounces have occurred but have consistently failed to reverse the larger structure. Momentum indicators have been mixed to weak on the higher timeframes, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the daily and weekly still lean bearish, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is some resilience when price holds the recent lows, but the overall structure still looks heavy. Here's the real debate. Is ETHFI actually undervalued at these levels, or is this a value trap after a large post-run decline? One side points to the non-custodial liquid restaking model, the integration with eigenlayer, the real staking and restaking activity, the expansion into DeFi vaults and spend products, the distance from previous highs, and the idea that liquid restaking infrastructure could re-rate if capital rotates back into Ethereum staking narratives. They argue that if TVL stays robust and the token remains central to governance and incentives, these levels could look reasonable in hindsight. The other side says look at the chart and the market structure. Many restaking and liquid staking tokens that peaked during strong narrative runs have struggled to hold value once attention faded. What's going on with ether.fi right now? The chart has been under pressure for a long stretch. Sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Ether.fi is a non-custodial liquid restaking protocol built on Ethereum. It lets users stake ETH while retaining control of their keys, receive liquid tokens such as EETH or WEETH, and participate in restaking through eigenlayer, so the same ETH can help secure additional services. The protocol has expanded into curated DeFi yield vaults and a cash card product that aims to let users spend while their assets continue earning. ETHFI is the native governance and utility token. It currently ranks near the top 100 by market cap, with a circulating supply close to 1 billion, and the price has been trading near the levels you're seeing after a sharp decline from previous highs. Volume and momentum have been soft for long stretches, competition in the restaking space has intensified, and the market has consistently treated ETHFI as a lower priority name despite the underlying activity. That's the classic trap setup. The technology is real, the protocol continues to process meaningful staking and restaking flows, but the market keeps assigning it a lower valuation while attention stays elsewhere. Retail often gets caught here, buying the liquid restaking and non-custodial ETH argument, while the larger trend remains downward or sideways. Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short-term bias flips with any real confidence. Longer term, it comes down to whether ether.fi can convert its liquid restaking and product suite into sustained demand and relative outperformance for the ETHFI token. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower. Bull case versus bear case is fairly clear. Best case, broader market risk appetite returns to Ethereum staking and restaking. Ether.fi continues to grow TVL and product usage. The token remains central to governance and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate highs over a longer horizon. Worst case is the opposite. Volume stays muted relative to peers, relative performance continues to lag, and the downtrend simply grinds lower toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform. Nobody knows which way this resolves. The chart is still fighting the technology narrative, the protocol continues to process meaningful staking and restaking activity, and the market remains selective about which restaking stories it rewards. So the real question is simple. Is this the kind of project that can finally break out of its long underperformance and re-rate higher, or are we just watching another established liquid restaking token settle into a prolonged period of low relative interest while people argue about valuation? Risks are meaningful, volatility is still present, a broader risk off move in crypto or continued rotation away from mid-cap restaking and DeFi tokens can pressure the price further. Downside remains open if the recent support zone breaks and the downtrend simply continues. Retail traders love the long-term Ethereum restaking infrastructure story and end up holding through multi-month or multi-year underperformance. Liquidity is solid relative to pure microcaps, but still thinner than the very top names, so larger moves can still happen quickly. There's also the structural risk that comes with any restaking protocol. The narrative has to keep generating real TVL, real rewards, and relative demand, or the token simply fades under competition and emissions pressure.